Hi, everyone. I hope you're well. Super excited to be here because this topic is very dear to my heart. I'm really excited to share how I think you guys and all of us actually can navigate the USD depreciation. It's actually something that's hitting home to everybody today. So super excited to talk about that. A little bit about myself. I'm Kenyan born and raised, but had the opportunity to study in London. I then went on to work at Deloitte and BlackRock. The BlackRock is the world's largest asset manager, which means I had the opportunity to learn from the most brilliant minds of how do you take the money that you've worked so hard for, invest it so that you can protect yourselves, like situations where our currency can depreciate, but also help us get closer to our financial goals by making smart decisions in your everyday life when it comes to money. So super excited to be here. And yeah, we're going to have a panel session. So Caroline, over to you.
Okay, that's really great, Radhika. Tell us, why did you decide to build this company?
So I guess like for me, building Ndovu was all about empowering Africans to take the hard-earned money. I know how hard all of us work on a day-to-day. And the reality is that in the African context, majority of people don't earn high salaries. And so you have even a smaller pie to work with. And if you're completely honest, the cost of living is just as expensive as living in Europe without some of the benefits that they get, which is healthcare, retirement pension. We do have these support systems here, but whether they work or not is a whole nother debate. And so what I really wanted to do was bring home financial education for our users. And I think, over the last year and a half of us operating, we've brought a lot of financial literacy, inclusion methods to help people better understand how to better manage money. And then lastly, when I was working at BlackRock, I was so happy that I invested in global markets and just markets generally. And, if I look back, I've been investing for 10 years now. I'm a much wealthier woman. I have a child. By the time he not retires, but when he graduates and when he's 18, he will come up with a healthy trust fund that I only contribute very little money every single month towards. And so just bringing that knowledge and empowering Africans to make smarter financial decisions so they can live a better future was the reason I started the company.
Oh, great. That's good, Radhika. Tell me, as you know, today globally, we are experiencing really tough times with inflation hitting very high levels around the world and unemployment is at an all-time high. And I feel like things are likely to get worse before they get better. So this is the same situation, of course, here in Kenya, where we're currently experiencing inflation rates of 9%. In addition, of course, Kenya's shilling has depreciated by 12.2% since the beginning of the year. Can you share more about this?
Yeah, so Caroline, I hear you. I think with the currency depreciation recently, we're all impacting it. So I'm going to take it a step back. I'm not sure if you can, I just wanted to pull up a slide so that
Sure.
Nope, can you see it? No, that's not it. Technical issues, sorry about that. Just a moment, I will stop share and try that again. Okay, let's try this. Sometimes tech doesn't work in your favor.
Yeah, it happens.
You
the
can,
best of us.
I will just present it when it's not on full screen because I can't actually figure this out. It worked earlier. So yeah, just talking about currency depreciation. If we take a step back, for a very long time, the Kenya shilling has remained very strong. So if you look back over the last 20 years, we've not seen significant depreciation the way Nigeria has seen. So the Nigerian naira, if any of you on the call are familiar with it, about last year it was trading at 300 to the dollar, and within a very short time it was now trading at 600. So within a period of 12 months, it lost 50% of its value. And what that means is that Nigerians flocked to the dollar. So whether that was holding dollars or investing in dollars. And for a very long time, there were various reasons why that happened to the naira. It recently happened to the Ghanaian currency as well, because the government defaulted on some money they had borrowed from foreign entities. And again, they're seeing significant currency devaluation. Now, for the Kenya shilling, to be specific, you know, at the beginning of this year, we were trading $1 for 123 shillings. And today, these are live numbers until the 29th, we now have to give 140 shillings in order to acquire $1. So our currency has depreciated by 12.2% year to date. And the reason it's a concern in this present day is if we look at the 5-year numbers, over a 5-year number, yes, our currency has depreciated. So if you look back 5 years ago, same date today, all the way up to now, exactly 5 years ago, our currency started off at that time, we could buy $1 for 99 shillings. And I remember this time because when I used to come back, I used to just do a 1-in-1 conversion. So, you know, 1,200 shillings divided by 100 and oh, that's $12. But today it now sits at 140 Kenya shillings. So our currency has become much weaker. And now that I'm living in Kenya and earning in Kenya shillings, you know, if I wanted to travel, import anything, if I wanted to send money to my friends in the UK or in the States, I'm having to, you know, require more money to actually be able to achieve any of those goals. So the Kenya shilling depreciation is something that has accelerated quite a lot over this period of time, and that's simply because we are experiencing. So going back to the crux of it, the reason this is the case is because, like many currencies globally, our currency is pegged to the US dollar. And what's happened in macro environment, so this is like what's happening globally, we're currently entering into a recession. And in order to protect the US dollar, the US government has increased interest rates. And what that means is that if you're not a USD currency and your currency is pegged to the dollar, because the interest rate has gone up in the US, so the bank is now offering you more money to save, all the dollars in the global circulation are now going to be held back to the States. Whereas before, when the interest rates were super low, so at one point interest rates were 0.5, 1%, you know, which you're not earning much putting your money in the bank. So a lot of people were taking that money and investing it elsewhere in other countries other than the US. But now, because of where we are from a global macro environment in terms of what's happening in the world, we're seeing high inflation, high unemployment. The Fed decided to increase interest rates. So naturally, all that money is now flowing back into the country, which means it is less attractive to hold the Kenya shilling in comparison to holding the dollar. So our currency is weakened as a result of it. It's not just a currency, just not as a result, just Kenya shillings, every other currency. So the Naira, the South African Rand, take any currency that's pegged to the dollar, it is weakened. Another reason our currency has weakened over the last 6 months really dramatically is Kenya is known for their manufacturing, right? So a lot of our businesses import either raw products or we import finished goods. So, import finished goods. And what that means is that our manufacturers need dollars in order to purchase the inputs that go into manufacturing. And as a result of that, there's been a shortage of dollars because, like I mentioned, as interest rates went up, all the dollars in circulation flood back to the US, and our manufacturers are struggling to actually find dollars to pay for inputs so they can continue doing business. And as a result of that, there's been a shortage of US dollar, in a result bringing down the Kenya shilling and increasing the value of the dollar. So those are the two key things that have really made an impact on our Kenya shillings. And the reason this is important for us is that not only does it impact our manufacturers and our business owners and the government, it actually impacts us daily in our day-to-day lives.
Oh. Wow. Okay. At least you've answered that question. And actually, Radhika, I can attest to this. Things are getting really expensive and my purchasing power is getting really tight. If anyone in the audience has experienced this, how it's affected you? Can unmute for a second.
Hello, so my name is Sharon, and
Hi,
I would
Sharon.
like to, thank you for allowing me to speak. So personally, I've really felt the pinch of the rising cost of living in terms of electricity. Electricity really went up, and it was not gradual, it's very drastic.
Yes.
Nowadays, I look at the bill and I actually can't believe it.
Yeah, that's true. Actually, yeah, I know about the electricity has really shot up. Anyone else?
Hi, Caroline.
Hi, Juliet.
My name is Juliet, as you mentioned. I think for me, it's impacted me in when I do my monthly shopping. So initially, I'm really big on budgeting. So I would budget all my expenses for the month and then just go buy whatever I need. But then I started realizing month after the other and after the other, the amount that I had budgeted for my expenses kind of was not enough when I would actually go to the supermarket to get some of these things. And it just ended up pinching even my pocket and having me to go back my pocket and even add more money to my expenses. So that's how I feel it has impacted me personally.
It really impacted everyone. I don't know. Radhika, and something else also we've noticed on the news, there's currently a lot of noise around the US dollar and the BRICS. What's that all about? Maybe you can shed light on that. What does it mean also for the US dollar?
Yeah, so before we move on to that, I would just want to add on to what Sharon and Juliet have just raised.
Okay.
The reason you're seeing an increase in an increase in the cost of living is because most of our products that we use are imported. We import oil. Everyone knows about the oil subsidies and the subsidies being taken away. And that automatically increased the cost of oil by 12% once the subsidy was removed, which means unga, sugar, flour, whatever you need oil for, which is either in manufacturing, transportation, it's gone up. And that's why, Juliet, when you do your budgeting, you will see a pinch in your wallet immediately. Another thing that we may have seen is the reason the government is now looking to raise more debt is because when the Kenya shilling depreciates, the cost of paying back dollars that we borrowed has become more expensive. So let's say we borrowed $10 at 100 shillings, that's 10,000 shillings, but now it's gone to 140. So that's 14,040 shillings. So again, the finance bill means that they need to increase taxes so we can pay off our foreign debt. And this is going to continuously be seen until our currency stabilizes. Okay. And that's why, as individuals, we will touch upon why it's important to navigate this environment in a second. But Caroline, you mentioned a really interesting thing. So I'm sure you guys have seen on Twitter, there's a lot of talks about BRICS currency and, the dollars, we need to move away from trading with dollar because the Americans hold a lot of power. So what that simply means is that certain big countries such as India, Brazil, Russia, South Africa, and China have been in discussions of how to move the global economy from being pegged to the US dollar. So it's not just Kenya shillings that's pegged to the US dollar. Globally, USD is seen as a measure of metric, and all the other currencies fluctuate in line with how USD is doing. And there's conversation out there to say, can we get more currencies in circulation so that if I'm a manufacturer in Kenya who needs to import raw materials from India, can I use the rupee to pay for it instead of US dollar? Can that become the baseline currency? Now, in theory, this is a very interesting idea. I think it's actually a shift in the right way. It will change globalization, things will move in a different direction, but this will take at least 10 years. And the reason being is that you can imagine if all our currencies are pegged to dollars, there is that much circulation of dollars in the market to service the demand. So we're not just now talking about smaller countries like Kenya, but if you imagine Nigeria, South Africa, which have much larger populations, they use a lot more dollars than Kenya, for example. Countries like China, India need to get enough rupees in circulation for that to actually be possible. And
Yes.
so it's a great idea. And I guess there's a lot of noise on Twitter saying, USD is now going to lose value. It will, but it's going to take 10 years. And we as investors need to think about today, the next 3 years, 5 years. So holding USD is still a very important thing. So it's too early to see the impact, but we'll see it for sure.
Okay, interesting. So from your financial perspective, what advice would you give someone like myself to protect my wealth from currency depreciation?
Yeah, so Caroline, I think this advice really goes out to everybody on the call. I keep going back to this and saying we need to navigate ourselves. We need to understand how to navigate currency depreciation. So the first thing to do is to think about your investment portfolio, whether it's small, large, big, whatever it might be. But the first thing would be to diversify your investments. So what does that mean? So diversification simply means is don't have all your eggs in one basket. Look to hold different types of investments. So let me take an example. You currently might hold a money market fund, a piece of land. You might be invested in a business through a chama. That's really great. But in this particular example, I'm saying let's diversify the currencies you're holding. So our advice today to everybody on the call is, given the currency depreciation is very rapidly taking place this year, and the central bank has predicted that the dollar will now go to 200 by the end of this year, you should aim to hold 50% of your wealth in hard currencies. Hard currencies are strong currencies like US dollar, GBP, or euro. Doesn't matter what it is, which one you choose, but the idea is that you should look to hold 50% of your wealth in USD, GBP, or euro. And the reason being is that naturally, as Kenyans, we're pegged to the dollar. So, Caroline, you have a Samsung phone. I'm using an Apple MacBook. When we go on holiday, we travel, some of the products like beers are, imported. If anybody likes a Corona on the call, that's going to go up by 12%. There's I can see some female names on the panelist. L'Oreal products will get much more expensive. So because we're a large importing economy, we have to make sure we're now earning in the US dollar. And how would you go about doing that? Is being smart in the way you invest your money. And so I would recommend investing in USD-denominated investments via Ndovu. One simple way also is, say you're earning a salary in Kenya shillings, it would make sense to just go to your bank and convert a percentage of your Kenya shillings into USD and just hold it. So that's one easy way to do it. But my advice is, let's not just hold money. That's one of the worst things you can do when it comes to inflation. You're better off actually investing in. And I can put some examples. Just one second. So I can talk through some examples. Again, these slides I was not going to use slides, but I thought it was nice to just have some visual ideas. And I guess a lot of you on the call might be new to investing, so I'll just take it a step back. Essentially, what investing is a way to potentially increase the amount of money you have. In this modern day and age, I think investing should be part of everybody's strategy, because Kenya has a really high rate of inflation, which is 9%. So let's say you're holding an investment like a money market fund that's giving you 10% and you're paying 2% in fees, you're actually taking home less and you're not outpacing inflation. So investing in USD denominated instruments is imperative for everybody to make sure they're growing and they're growing towards their direction, in the right direction. But before we get there, I guess you might have a question of what is a fund? Like if I invest in a denominated fund, what is that? And yeah, Caroline, I know when you joined our firm for the first time, you said, Radhika, what's a fund? And actually, what a fund is just a basket of companies. So there's a basket of companies that are doing super well. So if we take the S&P 500, which on our platform is known as the blue chip, the blue chip fund has 500 companies. Because of the name, it says S&P 500. And what you're doing is you're investing in the entire market. So you're saying, okay, I believe that these companies will continue to innovate, disrupt, grow, and people like us will continue to consume these products. So as a result of that, the value of these companies will continue to grow. And when you're holding that particular fund, which is just a basket of all these 500 amazing companies, you get access to Microsoft, Facebook, Google, MasterCard, Coca-Cola. And these are names that we consume every single day. We drink Coke, which is really bad for you, but I love Diet Coke, Coke Zero. You use a MasterCard payment system. We all use Instagram or Facebook, and we all use Microsoft. So just investing in a fund means you get access to 500 companies, of which it's very likely that you use 40% of them. And as you're consuming, you're also now owning a piece of the pie to say, okay, I really believe in the growth. And the beauty of investing in a fund rather than doing stock picking is that in a scenario when the market is not doing well, like it wasn't doing well about 6 months ago, say Apple was fined for releasing information and they got fined for privacy and they got fined $80 million. If I was only holding Apple, let's say I had $100 in it, the value of my stock would have dropped significantly because that's bad news for the company. So that would have gone down to, let's say, $60. But if you were holding Apple through this fund, your downside is protected because you have all these other companies like Facebook, Microsoft, Coca-Cola, and the likes who will be doing well. So your downside is protected. And that's why the best way to invest when it comes to USD denominated is not to do stock picking, because as a retail investor, Caroline, you don't have the knowledge, you don't have the understanding of the market, you don't know what to look for to say, I think Apple's going to be around for 15 years. But one thing we can say is we believe the stock market will be around for 15 years. So when you invest in a fund, you actually bring down your risk.
Okay. So could you walk us through some examples of how Ndovu can help us own USD denominated assets? Also, what are the risks? And also something, maybe you can tell us what we should be aware of.
Yeah, no, sure thing. So I touched upon one of the things earlier. You know, as retail investors, the key thing to remember is that we want to buy a fund that we think is going to be around for 10 to 15 years. So healthcare, for example, with the pandemic showed us that we will always need healthcare. So all the companies that are innovating, producing drugs, machinery, doing research, we're going to still need that to 10 to 15 years. So that's a great way when it comes to selecting what sector to invest in or what fund to invest in, is a great way to look at it. Another great example is technology. So we can say today that in the next 10 to 15 years, technology is yet to disrupt the market significantly. So why don't I just believe in the technology sector? And so in this example, for example, if you had put in $100 at the beginning of this year, your $100 would have grown by 20% up until June today. And that's because, you know, even though there's a global crisis going on, technology is still thriving. Everyone's still using Visa. Everyone's still buying Apple products. Everyone still needs MasterCard and PayPal and the likes. And so you can comfortably say that as a layman person who knows nothing about investment, do I think tech is going to be around for 10 to 15 years? Yes, it is.
Yes.
What we've done at Ndovu is that we've actually simplified how you can actually invest in markets. So we don't give you the entire universe. We say, okay, we've picked 20 USD denominated funds, and we think these will be the best ones to help you grow your money in the next 3 to 5 to 10 years time. So in this example, you know, we've offered you a technology fund for people who are more risk seeking, so they don't mind seeing a little bit more movement in their money. So some days you'll see your portfolio value go up, go down, but overall it's growing. So that would be a type of fund for somebody who's more adventurous, who's more willing to take a bit more risk. But then we've also offered the gold fund, which everyone here is very much familiar with gold. And I know Caroline particularly loves this fund.
Yes.
And so you know, gold is a really interesting instrument to hold. And what we do here is we provide you with access to the gold. It's a great balancing act in your portfolio, because when things are going wrong in global markets, people flock to gold. So in the stock market, people flock to gold. So last year, when we saw the equity market come down, gold did really well. So this is more for people who are looking to grow their wealth, but they want to see consistent returns rather than high returns. So the gold fund, for example, is denominated in USD. You are investing in dollars, you're earning in dollars. So this gives you the opportunity to diversify your portfolio by holding not only dollars, but also investing the dollars at the same time. So what I wanted to do here was just sort of go through an example. So Caroline, you said, okay, how can Ndovu help you manage your portfolio better so that your money is not depreciating?
Mm-hmm.
And the one thing is the example that I wanted to take. So let's take from the beginning of this year, Caroline was holding 10,000 shilling in her bank account. But let's say now Caroline wants to go on holiday and she wants to convert that 10,000 shillings into dollars. She's actually lost 12% of her money. So her in real terms, her 10,000 Kenya shillings today after 6 months is only worth 8,800 shillings because currency is depreciated by 12%. Now, in a best case scenario, like I mentioned, you wanted to invest in the technology fund. So this is here. In the beginning of the year, Caroline said, okay, I'm going to put my 10,000 shillings into the techie. What would happen is you'd come onto the platform, you'd select the fund. You can either invest with Kenya shillings or USD. It's completely up to you. If you are investing with Kenya shillings, we convert the Kenya shillings to dollars and we invest it on your behalf. Now, at the beginning of this year, Caroline's been holding it for 6 months. The portfolio, the value has gone up by 20%. So Caroline's 10,000 shillings has now earned 20%. And at the same time, now because she's earning in the dollar and the dollar has strengthened by 12%, she's actually in total made a return of 32%. So if today Caroline went to sell, not only would she earn from the 20%, but her 10,000 shilling would be worth 13,440. So you can see the value of actually holding your money in USD. But then I also wanted to take a worst case scenario because Caroline, as you know, and now that you've been with the firm, that there are times where your money goes up and down, and it's part and parcel of investing. But let's say that we, in this worst case scenario, Caroline invested 10,000 shillings in January, and the techie from then, so 6 months onward, lost 10%. But because of currency depreciation, because she was simply holding dollars, in the end, her value today is still 10,080 bob. So you can see that, you know, it's a no-brainer. You know, what I'm trying to say here is that you just need to, at the very least, hold USD currency, because by you simply making that small switch, you're earning 12% year to date, for example. And, you know, in this case of the worst case scenario, yes, the investment portfolio went down, and this can happen. My advice to everybody, though, when you see the investment portfolio come down, the thing you want to do is hold. You do not sell unless you desperately need the money, but it will come back again, and markets always come back because people continue consuming, you know, companies innovate, disrupt, and our population is increasing, and a lot of people are now moving from low income to middle income, so consumption goes up. And the point that I'm making here, even if the market went down by 10%, you're still better off holding US dollar. And what better way to do it by actually being smart about it and putting in an investment like the gold or the techie or the blue chip, because your money will continue to grow as part of it.
Well, wow. Thank you. Thank you very much, Radhika. That was a very, very insightful session, and we've learned a lot. And at least I know that we'll leave here empowered with the knowledge and strategies, at least to protect our wealth. So I'd like us to open the floor just for a brief Q&A session. I can already see in my chat, people have actually asked. I can start with this one from Natalie. No, sorry. Does Kenya risk dollarization if our currency keeps losing to the US dollar?
Great question. So I don't know, there was some news in the So I think there was, and don't quote me on this because I read it very briefly, I was skimming through between things, but there was something that the new governor in central bank today said that we should try and move away from dollar. So to be honest, I'm not the economist here, so I can't give you a solid answer. But really what we can leverage is the examples of what's happening in Nigeria. So Nigeria saw 50% devaluation of their currency, and all the young youth in Nigeria hold crypto or a stable coin. And stable coin simply means holding dollars. And they only convert the dollar if they need Naira. So to answer your question, Natalie, that could happen in Kenya, but I do still believe that Kenya, from an economic perspective, has better regimes in place. We have a stronger government. So I'm hoping that doesn't happen, because that's a very bad signal also for foreign investors. So at the moment, you probably see in the news, we get lots of funding from IMF, World Bank, etc. If our currency does depreciate to that level, that will dry up, because also foreign investors don't see value in investing in Kenya because the returns are so low. So to answer your question, I'm not an expert in that, but if we leverage what's happening in Nigeria, automatically the economy will move to the dollar. And that's a really bad signal, to be honest, for this market. And if you are all aware, Kenya is seen as one of the stronger markets in Africa as a whole to do business in.
Yes, at least you've answered. Someone else also had asked about the stable coins, but you've answered that. How about geographical consideration, e.g., a tech fund in the US versus a tech fund in Asia?
Yeah, that's a really good question, actually. So it's a really good question. So we obviously give you access to the tech fund in US, but on the platform we also have a fund called the Chinese Dragons. It's not a specific tech fund in Asia, but because the largest companies in Asia are tech, all of them are captured in that particular fund. We can give you access to that. We have access to those funds. We have access to funds in GBP, so in the UK region, Europe region. And the reason we've stayed away from it is because we don't want to provide or overwhelm our users with all the different types of options. But we always say that if there's a need for a particular fund, we'll run a survey, we'll see what the interest is, and then we'll put it on. So for example, we ran a survey recently and semiconductor fund came up, which I'm super excited to invest in. So I'm digressing a little bit. The semiconductor fund is materials used to actually that go into building laptops, iPads, phones, etc. And those semiconductors are going up in value. So it's a really exciting space, and we think tech is going to be around for a long time. So we're actually adding that onto the platform. So yeah, in terms of geographical diversification, I think it's always great to do. We currently manage that with the UK, the US, and Kenya, but eventually we can add Asia.
Okay, thank you. Another question here, very interesting. Given the currency depreciation and the difficulty in liquidity that we see in the news, are government of Kenya securities, that's bonds and T-bills, still considered low risk?
So this is a great question. And actually, we've been having a lot of internal debate with my co-founder. So my big value when it comes to investing or ethos is that you should be saving or investing for the long term. So that means that short-term noise, which is what's happening today, so our currency is depreciating quickly, I'm very confident that this will slow down because there's certain foreign investment that's coming in that will help the market stabilize a bit better. It is a short-term noise. So at this stage, if you had a bond that was coming to completion, so let's say 10 years ago you bought a bond, I would be worried if the government is able to pay it back. But longer term bonds, which have 17, 18, 10 years yet to pay out, I think economic times will get better and we will see the government fulfilling or meeting those obligations. But I would say they're slightly more higher risk. We also got downgraded by Moody's, which is a global indicator as a country as well. So naturally, we're slightly more higher risk. And also the government, with the recent bond rate, it was 15% plus. So the government is now also rewarding you a little bit more interest for the risk that you're taking. So to answer your question in short, yes, they are being seen as higher risk. However, if you're a long-term investor and not holding it for a year, that risk is very minimal because we do expect the economic. So the global environment will get better, which in fact will trickle down to other areas, seeing better inflation and employment growth numbers as well.
Okay. So given the US probability of a 70% chance of recession in the next 12 months, what's your opinion between holding hard currency and choosing to invest in Asian yields?
Very good question. I think right now, personally, it's a great time to get into Asia. So, you know, the Chinese, so I'm looking at just Chinese, but even Singapore, Philippines, and the rest of the region is very interesting. Now is a good time to buy because the stocks of those companies have come down in value. And we know Asia will continue to be a strong contributor to the world economic environment. And so what I would do, I wouldn't pick necessarily US versus Asia. If I have 10,000 shillings, I would put 5,000 shillings in the Chinese Dragon and 5,000 shillings in the techie, the blue chip fund. So I wouldn't take a bet on either region. I would just
diversify.
Yeah, I would just diversify.
Okay. As this is from Aman Bansal. He says, as a young entrepreneur in Kenya facing an economic downfall for the first time as a business owner, would you suggest or advise holding any of your Kenya shillings in a savings account if the value carries on going down, excluding the point mentioned of covering your currency into US dollars or Great Britain pound? What would be the next option? Would the next option be reverting to the USD or gold fund, gold fund?
So, I think that's really interesting. I think, by the way, you'll hear a lot of businesses go out of, so firstly, a lot of businesses are struggling. And secondly, you will hear a lot of businesses struggle. And the one advice that we get from our investors, and these are very educational people, is that during the downturn, you need to watch your expenditure. So the first step I would say as a business owner is to cut every single shilling you're spending that doesn't lead to revenue. So this is the wrong time to be experimenting with a new product line because that takes a lot of investment upfront without you knowing it's going to generate enough revenue. So the first step as a young entrepreneur, I would say, is to look at your expenses and see where can you manage them. And it's not just 200 shillings. If you're spending 200 shilling per order, that adds up very quickly. And so, Caroline can attest to this. We were very smart with our marketing budget, this year, because we recognize things are going to get really bad. So being very mindful with every dollar we're spending, and you should do the same. The second point advice that we've been getting from investors is, as entrepreneurs, you need to identify what's generating you revenue and just keep doing that. That's all. Don't try and experiment new things. Don't try and go into a new market. Don't try to break into a new customer segment. Simply look at, if Caroline is the customer segment that's giving me regular savings, I will only go after that. We're not experimenting. So that's another thing. Identify where your revenue is coming from and then try and generate more of that. And it's okay to invest in trying to generate more of that particular revenue. Now, to answer your point, to be honest, with Kenya shilling inflation being at 10%, so 9% actually, and the currency depreciating by 12%, I know a lot of business owners who are actually holding a lot of their investment in USD or GBP and in USD-denominated assets. And as a business owner, before you actually move into converting your money into that currency or investing it, you just need to be aware of what your cash flow needs are going to be in the next 6 months. So, of course, if you need, let's say, 50,000 shillings every single month to actually service the expenditure, generate revenue, hold that in a fixed deposit, a call deposit. So that's one that you can actually call without any fines. And then the others I would hold in USD-denominated assets. Whether that's a USD-denominated bank account, whether you want to invest in a fund through Ndovu, completely up to you. But that's how I would manage it. Have enough liquidity for your next 6 months of operation, pull back costs, and then whatever is in surplus, then hold it in USD.
Okay. It's a very interesting question here, Radhika. Is it possible to invest in petroleum major, such as Shell or BP, on the Ndovu platform? maybe it's something you should think about.
Yeah, we should. So we don't actually have access to that today. So as we can definitely, there is a fund that is solely focuses on gas. So it's like energy plus gas. So whether it's clean energy, so we'll have a look at that. I've made a note of it, but it's actually quite an exciting space, especially with the semiconductor as well. So yeah, thank you for the recommendation.
Okay, so with a minimum of 100 USD to invest a month, how long should I keep investing in a fund, or should I mix it up? Currently locked in a 3-year plan. Is it good to also invest elsewhere?
So because with $100 minimum, I would pick 2 funds. I would pick 2 funds and stick to it. In this current market, I would recommend holding the techie fund and the gold fund. You cannot go wrong. We're going to see volatility. It's really interesting because global pundits say that we're going to enter recession. I actually think we've already started to see the impact of recessions coming out. They might not have formally seen the numbers, but it's already happening. So my advice is the gold is a great diversifier when things are not going wrong. So I'd put $50 in that and I would hold it for 3 years. And then I would take $50 and put it in the technology fund, and you will see consistent growth over time. And yeah, because it's only $100, I wouldn't buy and sell, because actually the value of actually investing is compounded over time. So you're better off actually holding the investment. It's different when you're doing stock picking, which is where you're holding the individual share. So let's say, Ken, you bought Apple, and then you see the value go up and you want to trade it. That's fine. But that only works if you're doing individual. So I would, and actually there's a lot of research that shows that type of investing, people actually lose money more than they make money, because half of the time you don't know what's going on in the background. So you might think it's the right time to sell, but you might sell too early, or you might think I'm going to hold, but you end up holding and the value comes down. So in my professional opinion, I think stock picking should be left to professionals. You are better off with a safe bet saying, and it's not exciting, but saying, okay, I'm going to put $50 in the gold ETF and $50 in the techie and just hold it for 3 years, and you'll be thanking me later, because it's boring and it's not exciting, but it generates the returns.
Okay, great. We have Pete. Radhika, Pete is asking, great conversation on currencies, even better outlook from bondholders for the long run. Folks here in the US are embracing the IFBs and are buying power in USD. What are your thoughts on the talk, quote unquote, from CBK about their upcoming app?
Yeah, very great question, Pete. So Pete is actually based in the US. We know him personally. So thanks, Pete, for joining in and also engaging with us. So the reason that the diaspora are investing in the infrastructure bond back home is because they're, as Pete says, they're embracing the uptake in their currency, so the strengthening of their currency, and they can get more for their bang for their buck in this market. I think it's a great strategy. If I was earning in dollars in the diaspora, I would definitely invest in the infrastructure bond, provided I have a long-term view. Yes. In regards to the talk around the CBK app, I downloaded it the other day and it doesn't work. So they're still in testing phase, and if things are going well, I think it would be a great opportunity to, all the diaspora living in the UK, US, Nordics, etc., to invest back home, especially if you have a plan to retire at home. To be honest, I think retiring in Kenya or in Africa is bliss. So if I was still in the UK, I'd probably be investing in the IFB. A couple of my friends actually always remind me when the bond is coming, because they're from here, but they live there, and they're like, we will definitely be coming back. And another really good thing about the bond is that because it pays income every 6 months, if you had, like, say, 1 million shillings in the bond and it's giving you 14% every 6 months, when you come on holiday, you don't actually need to spend your own money. You just use the interest payments that you've collected. So I actually think it's a really good investment for diasporas. Yeah, that's true. So I have Eve. Where can I begin to acquaint myself with the Ndovu platform and products? And what's the minimum investment amount? So we have 2 products. So Eve, you can sign up on the portal, and then the team will be sharing a free financial planning webinar session, a session. So typically this session, if you were to go out there and get a session from a professional financial advisor, it costs around 10,000 shillings. But what we've done is we've said to our users, we'll give you the session for free because we want you to use the money to get acquainted with investing. So they'll send a link later in your free time, where whenever works for you, book a session. It's normally 40 minutes. Someone takes you through how to look at investing based on your personal situation at this point in time. And to answer your question, the minimum investment, we have two products. We have a savings product that we've launched that gives you 7%, tax-free, no fees, and it is a minimum of 200 shillings. You don't even earn that in the bank. I think it's a very innovative product.
Yes.
It's called Ndovu. And then, of course, all our investment products, the minimum is 5,000 shillings. So which is 5,050, which works out to be roughly $50. Now the currency's fluctuated, but that was the thinking. And you can invest $50 per fund. That's how it works.
Yeah. Also, the infrastructure bond, when it's available, the minimum is 50,000
shillings. Yes.
Yeah,
So
Kenyan shilling.
the infrastructure bond, when you go to buy it from the government, is 100,000 shillings. So what we're doing is we're allowing people to get in earlier, so they start understanding, how does it work? Is it beneficial to your life? And then when the next one comes around, you're then more confident to put in more money. So what at the beginning I said, why did we start this company, was actually to provide access to people so they can get started, they can start learning, and eventually once you see the returns, that we won't need to do education. So
yeah. That's true. So I have a question here. Is it possible to invest in Ndovu funds as a group or a company?
Yes. So actually, very interestingly, we have been seeing significant interest from chamas and companies. So companies themselves say, listen, we have this much cash flow that we don't need. We don't want to hold it in our Kenyan shilling bank because of the depreciation. So we want to invest it in gold fund, which is not risky. It's super stable, doesn't give me 20% year on year, but it gives me 9% on the dollar. Can I invest as a company? So we are launching, and I don't have my tech person on the call, but we're launching so right now they're just launching using the normal, they're just signing up using the normal process, but we're actually setting up a chama and a company access. So you can actually invest via a group or a company. And of course, chamas have said, we want to do it as a chama because that's been our culture. We want to do it as a group. So now on the chama features, which we'll be launching soon, you'll have one admin and several other people who can look at the portfolio, but you will have visibility on, okay, if my chama said we're going to do 50,000 shillings in the blue chip fund, is it there? So yeah, I'm very excited to look out for that. To answer your question, yes, you will be able to do it very soon, but for now you can just sign up as an individual.
Oh, great. So let's assume I decided to buy the ETFs on your platform. How will I be able to track the ups and downs and the impact it has on my investment?
So the beautiful thing about our portfolio is that it's all, you get daily pricing. So when you go onto the solution, let me see if I can just share my screen. So if you go onto a solution, in fact, this is a great time for everyone to sign up.
Yeah.
So if I'm going to just sign in 1 second. I'm just signing in so you guys can have a look at it. So we give you daily transparency. So let me share my screen. Here we go. So here you can see that my portfolio is up by 2.6%. So you can see, okay, this is a dummy portfolio, by the way. So just so you know, so this is a portfolio. So it shows exactly what I had invested in, futuristic Chinese dragon, the gold fund, and it tells you exactly how your money is moving. So this was the Ndovu product I was talking about, the savings product that gives you 5.5% tax-free, and then this is the one that gives you 7% tax-free. So you can see that if at this roughly the same time, I put in 2000 as an example, 2000 in, and you can see so these launched earlier this year, so it's been about 3 months, and you can see the growth in the portfolio. So to answer your question, we actually give you a dashboard up view of what's your portfolio looking like, what are the hot funds, and then we also have some educational content that you can click on here. And you can put some funds on your watch list, and then you've got access to all the funds here as well.
Great. So a hot question here, is Ndovu regulated by CMA, and how are the customers protected?
Yes, so we are regulated by the Capital Markets Authority as a fund manager. So a slight evolution of our company. We first went out there with an investment advisor license because we weren't managing our funds, but we very quickly hit the threshold of the number of assets you can have under that. And we then upgraded to the fund manager license. So the way your funds are protected is that when you're a licensed entity, you have to follow the fundamental way of how money is held. And if I just pull up a nice diagram, just one second. It's a really great diagram in the FAQs that helps me explain to just general public that, you know, this is how any investment should be managed. So what I would recommend is that even if it's not with Ndovu, you should always question the fund manager or the investment provider of how the money sits. So essentially, because we're regulated, the key question is, where do your assets sit and where does your money sit, just in case something happened to Ndovu, right? And this is the industry standard locally, globally. Again, we leverage this from my time at BlackRock as well. Essentially, what happens is that Caroline's money sits in this bank account, and she decides that she wants to invest via Ndovu into the gold fund. What happens is that the money doesn't pass to any of Ndovu's operational accounts. So it doesn't pass to our daily, you know, spending account. It passes to a custodian account. And this custodian is, like he says, he's the custody of the 10,000 shillings that Caroline has put in. And at no point can Ndovu access that, because as this account is set up, it's only set up for investments. So then Ndovu gives the custodian bank an instruction to go buy 10,000 shillings worth of the gold fund for Caroline. So the money then gets moved over to the broker, who will then purchase the assets, and the custodian moves 10,000 shillings over, but in return, you get assets. So that asset sits here with the custodian. So we are using a custodian based out of the UK for international funds, and we're using DTP locally for custody here. But essentially what happens is there's somewhere in our database that says Caroline owns 10,000 shillings worth of gold ETFs. Now, should something happen to Ndovu, because we're regulated, the regulator, so the local regulator, the FINRA, FC, and SEC will get in touch, and they will, because we have to share all our documentation with the regulator and the custodian, they'll get in contact with Caroline and say, hey, listen, we have 10,000 shillings worth of your gold ETFs. What would you like to do? Now, this process is a little bit lengthy, but if you've ever lost money with any investment manager or investment opportunity where they're regulated, you can even write to the regulator and say, hey, listen, I was invested with this party. I want to reclaim my assets. But in this situation, because we're working with the US and the UK, they'll get into a class action, and it will take 6 months, but they will get in touch with Caroline to make a decision. Would you like to move it to another custodian, or would you like to sell? So just so this is like, I know it's a bit detailed, but it's really important for you to question companies when they're offering you something like, where does my money sit? Who is the custodian? And do they have details of how much I own and where?
Thank you for that. Please clarify the fees charged by Ndovu.
So we charge 1% on every dollar or Kenyan shilling that's invested. We are competitive in the market. Typically, other providers charge 1.5% upwards. So we are very competitive in the market.
Okay. So how would we know which particular portfolio to invest to begin with, aside from the fact that you have already touched on the gold funds and the USD-denominated investment funds? Which ones would you advise?
So I think in this particular market, let's say you were starting off with 10,000 shillings. I would, just because I want you to, I'm not telling you to go in with 1 million shillings. I want you to become familiar with investing. So I would say, because gold acts as a protection and we're still expecting the economy to go a little bit up and down, I would put 5,000 shillings into the gold fund and 5,000 shillings either in the blue chip or the techie fund. I wouldn't complicate it. And this is why I just want to pick 2, because it just makes things more complicated. We have 20 different funds, but I think those 2 at this time are the best funds to pick, and they also have a lot of promise in the future.
Okay. Radhika, I have a question here from Esther. You know, money is emotive. What happens if the custodian bank collapses?
Great question, because Esther, this has happened in Kenya. So in Kenya, I don't know if you remember this, but Chase Bank, which is a custodian bank, went under. And I know a fellow founder who had some money with a custodian bank. So it is really down to the founders of the company to do clear DD on these third-party banks. So for example, we have a strategy in place that when we hit a certain threshold with one custodian bank, we hold the second set of assets with another custodian bank. And a compliance team on a regular basis look at the bank's accounts and reports to say, okay, do they have enough liquidity? Are they having any internal challenges? So this is actually a framework that I pulled from BlackRock. You know, before we gave anybody money, we looked at certain criterias. There's 4 different criterias. And so we look at it on a regular basis. But the only one thing I could say is that you as founders have to be very alert, because especially in Kenya, it's happened several times. This is why we have 3 custodian banks on our books, ready to go. And, you know, our compliance team is constantly monitoring their activity. That's the only way we can protect our customers' funds.
Okay. I have a very interesting question here. As part of KYC, kindly explain how 7% return is tax-free and how other levies are absorbed by whichever party, investor or Ndovu.
Great question. So this is part of our secret sauce. So we, my other co-founder, Rogita, is very good with regulations, and we found a particular financial institution in the ecosystem that doesn't get taxed. Okay. And so we, by law, this particular product has no tax on it. So it's very similar to the infrastructure bond, right? The government.
Oh, yes, yes.
Yeah,
okay.
The government allows you to invest in the bond without paying withholding tax. So this particular financial institution has a similar framework, and that's why you don't actually have to pay tax on it. And it's actually a really incredible product.
Okay, I think this it's very important. I think people really understand about investment, because someone is asking, when will Ndovu have ETFs, e.g. Vanguard SP 500s?
We already do have them. So
we already do, yeah.
Yeah, so what we've done, and I'll just pull up my screen again, just bear with me, let me go to the right one. What we've done is for the general public, we have simplified the names. So some people who are very familiar, so if I just go here and go to the blue chip fund, just want to show you 1 second, this is the blue chip fund. So we've named it the blue chip to make it simple for somebody to understand. So for every person who's layman, if I put the S&P 500 here, they get quite confused. But if you look closely deeper, this is the iShares Core S&P 500 ETF. So we already have that. And weirdly enough, speaking of the techie fund, this is the Vanguard Information Technology Fund here. So actually all the ETFs we offer are offered by really strong names in the States. In the UK, again, we've not just picked any random company. We've looked at what technology funds are out there, which one is better priced, what actually is doing the right thing on the tin, do they have strong governance? But for the ease of the layman, we've just named it the techie. And then we give you a small description of what it means. So these are companies that make internet tick, from routers to microchips to online payments to devices you use to access them. It makes, whether you use the internet for communication, shopping, gaming, blah, 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 this you'd invest in your future. And then we give you an example of the companies that you would be holding. So of course, there's a lot more funds in here, but for obviously space and user UX UI, we picked a bunch. And then of course, if you wanted to see more information, you click on the fact sheet, which is a link at the bottom, and you get full access on the ETF itself. And a little bit more about what other companies they have and what sectors they're investing. But those are this is more for the geeks like myself who want to do it.
Absolutely. On Ndovu Sure Supreme Fund, if I lock in, and I got this question very many times, Radhika, if I lock in 200 in the first purchase, and then in the course of maybe the month, you want to add another 200, how is the interest calculated?
So it's done like a bank account. And even though your first 200 will be unlocked within 3 months, so say you did the second 200 on day 2, it would be locked after 3 months plus 1 on that date. So it works like a bank account, and interest just, so however long you're holding the product for, you're earning interest daily. So it's like a bank account.
Oh, okay. Radhika, I want to thank you very much for this day, and thank you everyone for attending this webinar. Let's just summarize what we've learned tonight. Key learnings from today are that currency depreciation will likely continue over 2023 and 2024, but that should not discourage us from pursuing the life, of course, that we want. So to build financial resilience, we should hold 50% of our wealth in hard currencies like USD, and also it would be wise to invest early. And a great place to start is by signing up on Ndovu and investing in different US dollar funds that Radhika has spoken about, like the Techie and the Gold Fund. And of course, it's essential to make informed decisions when it comes to investing, and that's where Ndovu comes in. On an average, a financial session would cost you roughly 10,000 shillings, but Ndovu provides free advisory sessions that guide you through the financial and investment journey. You can book a 30-minute session using the link on the chat. Thank you very much, Sharon, for putting that in. So on behalf of the Ndovu team, thank you all for your time. For more information, you can reach us via support@ndovu.co or call us at +254 715 530 530. I'll say it again, support@ndovu.co or call us at +254 715 530 530. You can also follow us on LinkedIn, Facebook, and Twitter to stay connected.
Thank you, Caroline. Thank you all. Thank you so much for your time.